better? But how y'all day going today? How y'all day going? Y'all basically doing a little study of like when is dividend investing worth it, you know? I know people from what I've understood is like dividend investing makes sense as you get older, but it seems like you also gotta have a lot of money, like $1 million you put into something, and then you'll be getting $10,000 a month in dividend from something. You know, something like that. That's kind of my understanding of it. Because if you're young and you don't really have the money, it don't make sense to invest it into, dividends. But I'm about to go through ChatGPT and we're gonna go through other sources just to get a better understanding, Like I said, I definitely want to be studying with you all. Put everybody up on game. So I'm gonna pull up ChatGPT first, and let me see, bring this down. I got ChatGPT up already, right? And this basically what some of the stuff they talk. Matter of fact, I could probably pull it up on the screen. Boom. Nope, that's not it. Right, y'all. So this kind of the idea. The strategy, real play. Okay, boom, boom. This was the idea of the investing, right? Most people think dividends get paid while you sleep, which is what I definitely thought. Like, get paid while you sleep, you get money. Sound like free money, but it's like, is it free money, So I was looking at this, like, is it free money? Well, same things. What people think, get paid while you sleep, passive income, no work. They own the stock, so it just pay me, boom. But then it get interesting, right? The real truth about dividends. It's saying dividends not free money. When the company pays a dividend, the stock price usually drop by that same amount. And what's crazy is I was just reading this on I was reading this on Reddit. I'm gonna pull up my face cam a little bit bigger. So this way it got interesting though. When a company pays dividend, right, it dropped by that same amount. So a guy just was saying about the same idea. Okay, the price dropped and you get paid that dividend. So now you're only getting $2 dividend because it dropped by $2. So this saying you ain't get the extra money, you just moved it from the company to your pocket, right? Which most people like at a young age, I think it's at a young age. If you start dividend at a young age, they got the drip program that you could just drop all your dividends, reinvest it into the actual buying more and more dividend stock. So they say you're getting your money back. Dividends come from company profits instead of reinvesting the money to grow. They give it back to shareholders, and like I said, my understanding is you do the drip thing. So as you getting dividends, it's buying more stock and more stock as it continue on. So over the long haul, it's like it's compounding, and it's building up to get you more of that stock. And the more of that stock you get, the more dividends income you're going to get. And the goal is, as you get older, you can cash out those dividends and get $5,000 a month. And I ain't gonna say free money because it's saying it's not free money, but you get $5,000 a month cash flow. But you do probably have to have $800,000, $1 million in the fund in the stock to get that dividend cash flow. But let's see what this says about dividend stocks. Let me see. Dividend stocks are shares of company that make regular distribution to the shareholders. Okay, we know we distribute to the shareholders, usually in form of cash payments. Dividend stocks can be a useful source of income, right? We know that. But the best dividend stock can also be an excellent way to build wealth over the long term. And that's what I've been trying to be like more interested about people. It's saying this could be a good way to build wealth over the long term. So, however, all dividend stocks are great investments, and many investors are unsure how to start their research. Right? Okay. With that in mind, here's a list of dividend paying stocks you might want to consider, and some of the most important things you things to look for in top dividend stocks. Benefits of dividend stocks. Benefits for the investor: predictable income, which means cash flow, reduced risk, you ain't got to worry about the volatility in the market, and profit without selling, because you still own the stocks, but you're receiving either you're in drip and it's constantly reinvesting it back into it, or you're receiving the checks. So that's basically what that is. You're still going to own it, but you don't have to sell it. That just means you got to keep your $100,000, your $1 million, whatever it is, there in order to keep receiving it. But the minute you sell it, yeah, you no longer going to receive a check from that. Benefits for the company: investor loyalty increase, stock price boost. So I guess they use to constantly pump up the stock, make things more expensive. Good use of extra cash. Damn, they said it's the top stocks to consider. I just heard about this. Oh, Wasn't sure about it because I'm not sure about the dividend investing, but only dividend stock that I've been invested in was SCHD. I don't know who all ever heard of that. Microsoft, because this is a growth stock, but you know they got a dividend yield. That's why these right here, that 5%, that is strictly dividend stocks. Microsoft is definitely more of a growth stock I look at. That's why they do not pay that much of a dividend. Which they do got something that definitely pay a dividend. About the housing downturn shouldn't freight. But the house supply is tight. That's the real estate one. So I guess you had this. Own some of this. That way you won't have to own no property. Which I just was looking at a Wall Street Chopper video. And he was showing $30,000 in a property versus $30,000 in a stock. And it seemed like without doing the work, you do get the same amount of money from the dividend. And you don't have to worry about tenants and stuff like that. So I'm just trying to break it down to get a better understanding. And I thought this was going to be the link to break it down, but it seemed like this is not the link to break it down. I believe I asked OBS, I'm going to say, ask them for some links. Here we go. Just the links. I looked up Motley Fool. That's what that is. And I don't see this giving me, this is giving me different companies. All right, here you go. This is giving me a little bit more. Why invest in dividend stocks? Dividend stocks can be an attractive option for long-term investors seeking a reliable passive income stream. And that's what I mean by passive, like you don't got to work for it. Passive means it's just coming in without doing no work. Passive income stream who wants to potentially reduce the overall volatility of their portfolio. Like I said, you ain't got to worry about the volatility of stocks going up and down as much. That means it's less volatility. It don't go up and down fast like that. It kind of remain more steady. It's going to have its ups and downs, but over a way longer period of time versus like S&P 500 or NVIDIA. Moving every day. All right, dividend stocks can provide something of a portfolio cushion during market downturns. So, like I said, to be safe because they are issued by well-run, stable, and often older companies. Like they say, blue chip stocks, like older, that's guaranteed to last over the years. That's been around. I believe Ford is definitely one of them blue chips. AT&T, maybe a blue chip. Plus, you can reinvest your dividends to maximize the power of compounding returns in your portfolio. And of course, over time, we talked about the compounding, right? So, risks of investing in dividend stocks. While dividend stocks can provide steady income, they still carry risks that investors should evaluate. Of course, everything carries risk, but we're going to see how much of a risk. The most immediate concern is that dividend paying are never guaranteed. Okay, so the company ain't guaranteed to pay out, maybe only when they profit, right? Companies can reduce or eliminate them at any time due to financial distress or changed economic conditions. Investors also need to take care to avoid yield traps. There are usually high yield, or is it where an unusually high yield is actually a warning sign. So I guess if you're offering at 5-6%, it's a warning sign that the company stock price has plummeted because its business is struggling. Oh, that's something we learned today. So if you see them offering a high yield, chances the business might be struggling. And they're definitely trying to, I guess, make it look more attractive. Focusing solely on dividends can lead to slow long-term portfolio growth, as companies paying high dividends may reinvest less of their profits into research and expansion. There are also tax considerations. And this is an important part too, because it says you do get taxed. Dividends are taxed in the year they are received. If they are reinvested, well, even if they are reinvested. And that's what I meant by the drip. Dividends reinvested. So even if they're reinvested, it's still getting taxed. Like right now, I have SCHD, but my dividend is only, well, I don't think it's all from SCHD, but I know for sure my income right now is only showing like $84, which is like $7 for the year, or $7 a month and $84 for the year. Yes, Lil, how can I help? I'm talking online and I'm learning and studying my dividends and stuff. I'm talking about? Yeah, I'm on live. Yeah, I'm just studying it out loud, but whoever listening. No, I'm on Tattoo Twitch, but I can't get the YouTube working, so yeah. So what was I left off? Portfolio goal long term. May reinvest less of their profit. Okay. There are also tax consideration, right? They're gonna get taxed even if they reinvest it, which can create higher tax burden than holding growth stocks until they are sold. So we know that's one thing right there. That's a big difference. Dividend stocks, they're gonna get taxed regardless. Like if you reinvest in or not, you still gonna get taxed. So you gotta write that off on them taxes. So it's something to think about. Versus a growth stock, like if you invest it, as long as you don't sell it, you don't have to pay taxes on it. So they got unrealized and realized gains. So dividends is considered realized gains immediately, and you will be taxed on it from what I'm getting it. And like I said, if they got anybody else, because I will be putting this on YouTube, so if they got other people that's bigger into investing that know more, I definitely appreciate it. That's why I'm doing the studies right now. Even though I don't think dividends is really attractive to me, but I just wanted to go over it for anybody else on the channel, and once I post a video on the channel that might be interested in it. How to choose dividend stock. Identify stocks that meet your criteria. You may be looking for the yield, history of the dividend growth, or something different. And most time people look for the long-term history of the dividend, how long they've been paying the dividend. Like they said, they could stop paying it any time, but if they've been paying it over a 10-20 year period, chances they probably not going to stop paying it no time soon, because it's been doing it for decades. Research the history of the earnings growth. Dividend growth is substantial only if a company earnings have also steadily grown. So that means the company got to grow too. But most of the dividend stocks I've heard of, they seem more like ETFs. So it's a group, a basket of companies that's doing good, that's paying out that dividend at a similar higher rate over time. Consider valuation. While paying a modest premium for a high quality business and sometimes be justified, or say can sometimes be justified, overpaying can significantly weigh on long-term return. Determine position size. Consider how much exposure you want to a particular stock, how much income you expect it to generate, and often factors ensures you buy an appropriate amount. Focus on long term. That's what dividends for. Long term. Dividend stocks deliver best when you buy and hold them for many years, right? Like I said, you start young. By the time you're 40, retirement, maybe you could cash out some of that. But let's learn more. Have patience and letting exceptional managers run great companies while you just sit back is how you get the best returns from dividend stocks. So it is best for you to start early in the dividend stock game and continue to build up. I was looking at like maybe you had to have a lot of money and you throw that 1 million into a dividend stock, you could definitely start receiving some checks. I guess it worked both ways, but I guess it compound more. But that 1 million at the end versus you got a couple of dollars to put in it as you keep compounding. I'm not sure how that will match up. How are dividends paid? Okay, in most cases, dividends are paid in cash by the company to your brokerage, which puts the money in your account. Other companies offer direct stock investment plans. That's the drip. How often? The vast majority of companies issue the payout quarterly, which is every 3 months. A handful of companies pay dividends every month. Like that real estate, I believe that one do pay every month. I heard about something that pay every month. On rare occasions, the company may also issue a special dividend. What's up? What's up? What's up, True? What's good? What's good? I'm trying to get into my studies, and I'm just studying on the dividend stocks right now. Been good. I've been on, main thing I've been trying to get back into that, the trading and investing. I've mostly been in the shop, but I definitely won't put the time into the trading and investing because I do want to roll over to that. You know what I'm saying? Appreciate that, True. Appreciate that. Because the goal is I don't want to work forever. I don't think none of us really want to work forever. Now, mind you, the tattooing, I think I will always do it, but just when I want to do it, just having a choice. And to me, that's what wealth is, Wealth is saying I'm going to wake up, if I want to fly to Japan, we can go to Japan. If I want to feel like going to do a tattoo in the shop, let me go do a tattoo. If I want to trade on the market and just make some money and get off, I could do that. And I could lay in my bed. Or we could take a trip after I've been made this $2,000 just in the market, stuff like that. So that's kind of my idea of the wealth. And wealth also is like, generational. So I definitely want to pass that down, stuff like that. But you could definitely let me know what you know about that dividend stocks too. Because like I was telling them earlier, I was looking at dividends. Okay, you start early with a little amount of money but how much is going to add up at the end versus just waiting till you older, investing 800,000 to $1 million and start collecting some checks. You know? Oh yeah, dang. So they even got something that pay weekly, huh? That's why I say, I'm just trying to see what's the best route. That's what I'm learning. Cause right now I only got SCHD for my dividend stock, and I think I'm receiving $7 a month and like $84 a year. But I think I only got like 1,000 some dollars in SCHD, so that's not really nothing. A lot of the other stuff from Compound, from like SPY, which is SWPPX with Charles Schwab, stuff like that. I've been getting more into. All right. So you've been getting more. So what made you get into more dividend investing? Because right now, that's what I'm on. What would you say made you get into the dividend investing? Because like I seen a guy on Instagram. Well, that was YouTube. Chris Sane. He was talking about it, and it was a real attractive stock. It was pretty cheap, $30, $28. I got it when it was like 27 at the market drop, but now it done went back up to like $32, something like that. SCHD. And it sounds interesting, like you said, you getting paid over time. But as I was just reading this, they're like, it's dividends free in money, or did the stock drop and they just paying you dividends? But SCHD have been going up, so it don't make sense of it dropping and they paying you dividends. So I've been dividend investing in other strategies for a while. Okay. But anytime I hear a new strategy, I try it out. Okay, cool. So you ain't got one strategy that you just gonna stick with and boom. And that's I don't think it need to be just one strategy either. I understand the ETFs, but you can have probably 50% of investments in ETFs, but still have like your other little strategies you try out. Who has the strategy of paying your bills with dividends, right? And that's the thing. In order to pay your bills with dividends, right? Let me look and see if they got a dividend calculator. Cause like what you really have to put in to really get that to pay your bills. Let me see. The most likely they got a dividend calculator. Let me see this Charles Schwab. They got it on Charles Schwab too. But his YouTube is pay. Oh no, yeah, you good. Paycheck portfolio. I'm gonna definitely look it up on my phone. Like I say, I'm learning. Dividend calculator right here. Let's go back over here. And let's see what this talking about. Dividend calculator. So let's say we're gonna use SCHD. I think that should be on Yahoo Finance. And I just want to see how much we really need to have to pay our bills off dividends. And that's what's like, interesting. Let's pull this up. I'm gonna type in SCHD. What's up, man? Huh? I don't think so. I'll look at the calendar though. So SGHD $30 and something right now. Let's see what all they're looking for. Unit share price. Well, we're gonna put the share price $30 and what it was? $30.74. Let's see how much. Let's say the phone bill $100. Let's see how much we would need to have to get this to pay the phone bill. Any bill. If that. They're up 74. Okay, cool. So right now, I think I only got 50 shares of FCHD. Holding period. Oh, this ain't if you holding it for a long time. 5%. What's the dividend yield on SCHD? Oh, they got a dividend yield right up in here. Am I looking past it? Right here. But this year to date, that's not the regular dividend yield. 3%. That's dividend yield right there. Boom. 344. Okay. Annual contribution. Let's say for somebody that don't have it like that, right? No, not annual. Let's say 1,200. I say, you know what? Let's say somebody putting 50 a week. That's 200 a month. So that's what, 2,400. No, everybody not making the bread, but we're gonna do it for the basic person that probably could invest 2,400 a year. But for some it might be a stretch because some people can't even save that. It's crazy the way the world is. All right, so that make a big difference, huh? Well, no, dividends reinvested only go up by a little bit. I ain't put that many shares. So I guess this if you starting at 50 shares and your stock appreciation. So I'm not even sure. Net assets X. Nope, they don't got no stock appreciation on here. Let's see if we got a summary. Historical data. See if they have a stock appreciation. I guess I ain't gonna be able to find these exact numbers because I don't see exact stock appreciation. So this year one, $4.35, or that's your actual dividends, I'm guessing. Dividends reinvested. Contribution will be 24,000 over 10 years. So you have $5,741 in dividends. And this will be the principal. See, yeah, I'm still not getting exactly the dividend investing, but I could check out the guy that you're talking about too. Just to see what he's talking about. What his name was, phone bill, paycheck to portfolio. Let's see what he talking about. 100% invested entire paycheck. I invest my entire paycheck, then live off it. That's interesting. I live out of my brokerage account. No bank needed. I don't pay my bills. Fully invested, no cash. My fire strategy. So I do all these is based off dividends. Or do I need to market drop what it did to my system? So it's like AI videos, I'm guessing. I guess this show was in my headphones, baby.
Their bills from the bank
Yeah.
account and invest what's left over, 7, 10, 15%. In the new way, or the paycheck to portfolio system, my income goes straight into a brokerage account. I immediately fully
Yeah, he definitely
invest
shows
all of
account.
my funds into assets, and then I borrow from my portfolio to pay my expenses. And I rinse and repeat that week after week, month after month, year after year, and that will ultimately set me free from a 9-to-5 job much quicker. That's what we're going to talk about this morning, step by step. But let's jump right into a portfolio update, and then we'll keep talking through this concept. We have a ceasefire in the Middle East right now for the next couple weeks, so the pre-market is absolutely going nuts in a good way. Last time I
That
looked,
is
TQQ was
interesting
up
though, to like,
$20
live
pre-market.
off your
So,
stuff,
I anticipate
borrow.
the market's going to go up 3, 4, 5% potentially today across the NASDAQ, the S&P 500, and all the other indexes. But looking at my
Yeah, you're right about that, true. If he used margin, because that's one thing I always try to stay away from is margin. But everyone won't be comfortable with. But his strategy isn't bad at all.
portfolio on the pre-market, my net account value is sitting at $189,393. That's my net
You said you like that income producing part? Let's see.
portfolio amount. My unrealized gains is sitting at 7%. My available for
But
withdrawal
this
this
not all dividends though, huh? This just like his brokerage account in general. Net account value, all right, net realized gains.
morning is $23,418. This is the amount I live off of. If I swipe my E-Trade debit card, it pulls from that.
Oh, that boy got an E-Trade debit card. Oh, he making it all dividends. Okay. So this the amount he live off from the amount that's in his withdrawal. I guess the cash, huh? This cash value available for withdrawal.
That available for withdrawal, and that's what I live off of when I pay my bills. If you look at the last 2 years, this is the time weighted return performance. This just includes the pure growth of the portfolio and any dividends received. So over the last 2
Okay.
years, compared to the indexes, my portfolio is up 40%. The S&P 500 is up 26.5%. The Nasdaq's up 35%. The Dow's up 19%, and the Russell's up 23%. Over the last 1 year, my portfolio is up 47%. The S&P 500 is up 30. The Nasdaq's up 40, pretty much 41% there. The Dow's up 21, and the Russell's up 39%. Over the last 2 years, while fully living out of the brokerage account and spending all of my expenses from the brokerage account, I'm up $123,000. You can see it.
And see, watch how much he generates. Yeah, he up $122,000. I want to know how he do that. E-Trade got a debit card, so I guess he able to pay everything from the debit card. He said living out the brokerage account.
Over 2 years ago, I was sitting at $66,850, and currently my net portfolio value is sitting at
Wait,
$190,000.
say that
I
again.
also have a gross portfolio value because I'm fully invested in net portfolio value. As you can see, it over 2 years
Two
ago, I was sitting
years.
at $66,850, and currently my net portfolio value is sitting at $190,000. I also have a gross portfolio value because I'm fully investing, and then I'm borrowing from that equity to pay my
That's the
bills.
part you're
So
talking about, borrowing from the equity, huh?
this morning, my gross portfolio value is sitting at about $400,000, and my net portfolio value is sitting close to $200,000. So the best analogy is a piece of real estate. If you own a $500,000 house and you have a $250,000 mortgage, then you have 50%
Right.
equity. That's how I live out of the brokerage accounts the exact same way. So over the last 2 years, again, up $123,000. Over the last 1 year, I'm up $91,000. So
Yeah, the borrowing is part of his overall strategy. Yeah, dividend part, nice. And no
last
lie,
May,
you ever heard of the buy, borrow, die strategy? I've been trying to learn that part as well. Like I said, people don't pay no taxes because they borrow against their stocks or equity, stuff like that. And it's, loans don't consider taxable income.
the portfolio was sitting at $99,000, and now we're approaching that $200,000 mark, which is basically doubled at that point. So in 1 year, I've been able to double my net portfolio.
Yeah, that's kind of what he's doing, right? Because if he's using that, borrowing against it, right, it's not going to be taxed. Okay.
Value while fully living out of the brokerage account. And then looking at forward looking projections on estimated income, right now I'm projected to receive $43,225 of annualized income.
Oh yeah, I
So
see. Yeah, so 43,000. Really, all of it is straight from dividends. Now I see what you're talking about. Eventually, the dividends will be so high he won't have any debt payments. Right. Basically, dividends will pay for everything.
what E-Trade does is they take your last dividend here, they look at the last distribution, and then they annualize that out over 12 months. Now, sometimes your distributions are going to be higher, sometimes your
He
distributions
only
are
got
going to be lower,
130,
but typically I'm sitting
21.
between $40,000 and $50,000 a year of dividend income.
Dang, that's interesting. I'm glad you told me about him because the good part
That
is
gets layered.
the good part. What I'm thinking is like he don't sound like an old guy, so that tell me right there, dividends ain't just for older people. You know what I'm saying? Sound like he's still a young guy that's living out the account, making it work.
On top of the equity growth. So you have to look at both things when you look at the performance, includes the trailing dividends and
He's like early 40s. Okay, I
equity growth.
appreciate that though. True, appreciate that.
And then looking forward, you have to plan for additional income. So I get a double dip basically. Every 2 weeks, my paycheck comes in. I'm buying those assets. Those assets will grow long term. And then on top of that, those assets are throwing off dividends in the form of cash flow as well. So if you think about any company, they have an equity base. Maybe they're going to expand. Maybe they're adding more access, which generates more cash flow and it keeps the whole system alive and compounding. That's how I treat my brokerage account. If you look at the next month, currently I'm projected to get about $3,500 of dividends. Again, this varies.
Yeah,
Normally
you're
it's
right. See, like my thing that's at $84. All of it ain't strictly from dividends because I got growth stocks and stuff in there. But yeah, all his is literally straight dividends.
between $3,500 and $5,000 a month.
And then you have others who try strategies like, for example, I would say my AT&T bill is $95, so I buy enough AT&T stock and that pay. Yeah, that makes sense. So basically, your stock in that company will pay your phone bill. I see what you're saying.
And that's exactly how I'm compounding and snowballing my cash flow on top of the equity growth over time. So, summarizing this system as simply as I can, my income hits the brokerage account. I immediately invest those funds. My portfolio generates income.
Right. Make the company pay for their own product. And that's a small way. Definitely, it makes sense. Definitely makes sense. It's an interesting strat, like you said, to learn.
Expenses are paid from the account, and I'm not waiting to invest. I invest first and then borrow from the equity again to pay my bills.
All right. So, like you said, that's interesting right there. His paycheck automatically go into the investing account. So it's like direct deposit into his account. And then he borrow against the equity and the stock. So is he borrowing from the unrealized gains that he have in there?
Which allows me to be fully invested and to compound my account quicker, as opposed to depositing my money into a bank account. That bank account's taking your money and lending it out to somebody
And I
else.
always
And
told people that that's what I don't like. That's why I want to get away from the regular bank account. And they say they taking your money and they loaning it out, making more money on anyway. So best for you to find a way to do that exactly. Borrowing from the unrealized gains. Cause it's like collateral, you know.
creating an arbitrage off of that system and business cash flow from your money. I'm doing the same thing with my funds. Instead, it's going into a brokerage account. I'm investing into equities that grow and funds that pay a 10, 15, 20, 25% dividend. And then I'm borrowing from that equity at 5.49% coming out of my E-Trade account with margin. That's how I.
Okay. So he using margin to get the cash. It is an interesting process. Let's go back. What he just said.
And into money. I'm doing the same thing with my funds. Instead, it's going into a brokerage account. I'm investing into equities that grow and funds that pay a 10, 15, 20,
Return.
25% dividend. And then I'm borrowing from that equity at 5.49% coming out of my
Right.
E-Trade.
So he borrowing at 5.49%. And that's the beauty of this. Like, like credit cards is like 28.3%. They killing the market with them credit cards. But 5.49% is nothing compared to that. So somebody else loaning you money and the bank gonna want way more than that, right?
Account with margin. That's how I rinse and repeat and how I expedite breaking free from corporate America or the 9-to-5 job. But honestly, where people get nervous or uncomfortable is, well, what about emergency funds?
Right,
What if the
emergency funds. And that's my thing. What I've been trying to do. Like, where should I keep the emergency fund? High yield savings account, stuff like that. I don't know. Still been doing my research on it because it definitely don't want to keep it in a regular bank account. High yield offer a little percentage, but not much. Well, he explained all that. Appreciate that.
the stock market drops? What about using margin? All those things are valid concerns, and it pushes us to a place where we're uncomfortable, which I think is the right place to be. Now, I always have put option insurance on at all times. You can go
Put
to my YouTube
option
channel and you can
insurance.
look at the video, how I protect my portfolio
That's interesting. He got put option insurance. So now that made me think talking about options, is he? Just some additional to search, add to your arsenal, most definitely.
against a market correction or crash. And then you can look at the market crash cheat code. I use put options at all times to insure against a market correction or a market
Oh,
crash. And
see,
those
yep. So he basically talking about using put options in general. I'm thinking they were still dealing with dividend, but no, he's saying he used put options as insurance when the market is going down. That's interesting. Let's go back.
channel and you can look at the video. All those things are valid concerns, and it pushes us to a place where we're uncomfortable, which I think is the right place to be. Now, I always have put option insurance on at all times. You can go to my YouTube channel and you can look at the video, how I protect my portfolio against a market correction or crash. And then you can look at the market crash cheat code. I use put options at all times to insure against a market correction or a market crash, and those videos are there and available for you. You can also go check out my playlists. My very first video.
Now you can meet with a TurboTax expert in your community.
Because the dividend producer still can go down, right, in value, even though he don't sell. Yep. And if that happens, the put goes up, right. So it's like playing both sides. If it is going down, I'm gonna play the put. For as long as we going on the up and up, he ain't worrying about it. He gonna let it do what it do. That makes sense.
Brokerage account, getting close. I use put
Risk
options at all times
mitigation.
to insure against a market correction or a market crash. And
Appreciate
those
that
videos.
term. I definitely heard the term before, but I probably need to do more research on it. Because even when they go down, the dividends still get paid, right? What you think about this, True? This is something I was just reading on. I was doing some ChatGPT stuff, right? And I think it was like looking at dividends as free money, but they like really the stock really drops. So is it free money, or are you just getting money from the stock that's going to your pocket? Transferring, what is it? Transferring from the company to your pocket. So the $100 stock pay $2 dividend, but the price dropped to $98, which means that $2 that it dropped is paying out. And I know I was looking at Motley Fool, and they were saying like the dividend's not really guaranteed because of course it could drop, and they decide to not pay as much dividends when they choose to. As long as you don't sell, you good, right? Because the minute, yeah, especially with dividend stocks, like once you compound it, it's like you gotta let it keep on growing. Like they say, snowball rolling down the hill, just keep on picking up, picking up.
Videos are there and available for you. You can also go check out my playlists. My very first video, why I live out of my brokerage account, getting close to 100,000 views there. And I launched this YouTube channel.
And that's what I was saying. Most people look at the history. That's what it was, one of them things on Motley Fool. Some of them have a long history of paying dividends though, like those dividend aristocrats, right? And they rarely, they got decades of paying that dividend. So it's like it ain't nothing that you know tomorrow that's gonna just all of a sudden stop. And that's what people look at it.
A year ago, basically for a friend of mine at church. His name's David. But this is where I was explaining why I live out of my brokerage account. Then you can see how I borrow money to make more money, how I'm 100% invested. And you can go look at the popular videos there if you want to follow from the very beginning. I also created a playlist for you to make it easy for you to watch all of my videos in a sequential type of an order. So if you look at 1 here, this is basically the mindset shift. If you look at 2, this is the system and how it actually works. 3 is the engine and building reliable cash flow.
So he showed
4 is the advanced engine with margin.
He pretty much, like he said, he showed exactly how he set it up, how it's run, the advanced engine based off of. Oh yeah, that's right. Okay, so you've been going through his own videos. I'm gonna definitely check this out. I had to go back over.
Yield mechanics and basically structure. 5 is portfolio management, protecting and optimizing, like we were just talking about, using put options as insurance. 6 is freedom mode and living off of your portfolio. And then I have a Spark to Fire series where I'm showing you how I'm doing this for my 17-year-old daughter who's about ready to graduate and go off the.
And that's a perfect sign right there. If he's doing it for a 17-year-old daughter. So that shows you it don't matter what age. If she's doing it for somebody that young. And that's another thing, true. I don't know how you is. But that's what the only thing I want to do once I eventually have the kids and stuff. It's like training them into it. Because knowing money is one of the most important things. Because this world run off of money, of course. So you need to know how this money working. And how to play this money game to your benefit.
College, I'm starting a paycheck to portfolio account with her to teach her how to live out of her brokerage account and to basically get free much sooner and make her job an option at that point.
If you go to any of, like you say, make her job an option. And I think that's what the knowledge is all about, how he passing it down to his daughter. So she basically do the same things, and most likely with the knowledge she giving her, she gonna be probably 10 times better at doing it because she's getting advice so young, huh? And that's the main thing, true. Like I said, once I do have a kid, definitely open up some accounts. So my thing is, of course, a regular brokerage account. I was looking at Roth IRAs. How do you feel about a Roth IRA? Because Roth IRA, of course, is a retirement account. Which me myself, I'm like, I'm not trying to hit $1 million or be a millionaire by time retirement. Like, definitely want to have that before that. So it definitely is gonna take whatever sacrifice. That's what that wealth gonna take, a lot of sacrifice.
My videos under the pinned comments of all of my videos.
So you say both of you. I know you say both of your kids got their own. I have kids set up with the UTMA account. Let me see. That's with a certain brokerage account? Oh, let me see. Okay, UTMA account for kids. UGMA. All right. Oh, I ain't no Gerber Life off of that, huh? Oh, so it's with Schwab. Cool. Yeah, that's with everything I'm with. I'm gonna definitely do some research into that though. So I appreciate that.
Videos, I have all of our resources available for you. I've developed the Paycheck to Portfolio Training Academy with a free calculator that's available here. All you have to do is click on these links. You can set up white glove coaching and mentorship with me. That's one-on-one training with myself. Deep dive into your specific situation, side by side. You can book a one-on-one strategy call with me. That's a high-level call. That's a 30-minute call where we talk about the Paycheck to Portfolio system. You can join our private Discord and membership with multiple folks living out of their accounts. We have a full-blown web application going live today, which will integrate directly with your brokerage account, and it will do all the business analytics and operations for you so you can run your portfolio like a business. You can also download our free starter kit and simple calculator if you want to see how your own finances might be impacted. A few final thoughts this morning before I leave you to a market that's probably going to go very, very green today, which I'm excited about. You know, this is the part that changes everything. It's not about stocks. It's not about ETFs. It's about how you think about money. The bank stores your money. The portfolio deploys your money, which allows you to break free from what I call the golden handcuffs. I'm trying to retire in 5 to 7 years versus the
Right.
traditional
See,
15
I
to 20.
say 5 to 7 years, and that's what I'm trying to give myself in the market. I was saying 8 years. Give myself 8 years in the market, figure this out. But since I said 8 years, I think it's then went down to definitely 7 years now. So I gotta definitely start getting on top of this.
20, 30 years. Now I'm in my 40s, my early 40s. So, for me, I want to hang out with my family. I want to serve at church. That time is so valuable, and the average life expectancy is in the mid 70s, right? So, personally, my dad passed away at 71 from a rare type of cancer. He worked until his mid 60s and then passed away in his early 70s. And I had a great childhood, a great father. We did a lot of fun things together. He always made time for his family.
And that's one
But
of
what
the
I would
things,
say
like you said, the main thing is time. So when I do have the kids, right, just to be able to be there in time, not like work and then you can't,
is working his whole life. With that short time, it made me realize that time is so
Definitely.
valuable. I've always realized that. But what I realize is I get older, obviously time moves so much faster, and I want to redeem that time to hang out with my family. I'll never stop working. Work is just going to look different. It's going to be serving at the church.
Right, and
It's going to be going
that's one thing I said too. Like you said, yeah, never stop working because just doing nothing all your life is gonna be boring. Even though you're receiving the cash, you got to be doing something.
on trips with my family. It will be going to visit my kids and my grandkids and those type of moments, right? So I'm working to expedite my freedom curve there so I can spend this valuable time in moments and memories like that. If you found this video useful, please
And that's a
like and
perfect
subscribe.
example. Like buying your time back. That's a perfect example for that. I want to know what should I look up because I don't want to go through all of his videos right now. I'm gonna probably put this in ChatGPT and see if they're gonna give me some basic hints off of that. He said ChatGPT clutch, huh? Living on margin. 5.49%. That's what he said. I believe that's what he said. So you said he's using that space button. Yeah, chat be coming through. Like I said, I try not to go exactly off of this, but just to get an idea, and then sometimes I tell it give me some links where I can do more research and study this. Living off dividends. Yeah, right, the links. And that's the thing, a lot of people mess up like looking at ChatGPT, but they only go off of what ChatGPT saying. No, this is just a helping hand, okay, give you some more resources to look at. Because just going off of, nah, I don't take it for face value, no. Like, we gotta dig deeper. Living off dividend plus more than 5.49, what it really looks like. Idea simple version. Invest in dividend stocks like SCHD, VMY. Use margin borrow money from your brokerage account at 4.9%. Collect dividends that hopefully pay more than your borrowing costs. And yeah, that's the main thing. As long as you get more than this, you'll be all right. That's why I tell people, if you're going to invest, even starting to invest in general, please get rid of the high interest credit cards because that 28% ain't no way you can invest in the market regularly giving you 8 to what 10% and you paying 28%. It's like we're going backwards. Yeah, true. I don't know if you know, but I finally started a little YouTube account. Let me see it. Yeah, this is my little channel right here. I'm studying it, but I'm also trying to give people what I know so far and what I've learned. And basic, I try to go from like what is it? A wake up call, open your account, remove the guesswork, and then emergency fund, saving money, stuff like that. Debt versus invest. That's why I was talking about that. Don't go backwards, but let's go back to. Like I said, I definitely want kind of immerse myself in this more. And no lie, that channel been growing. I think I only had 5 subscribers. I'm at 20 now, so within a week, I would say. So it's been interesting, but I also almost got like 50 videos up there because shorts. Each video I've been breaking into shorts. Let's say you invest 100,000 of your own money. You borrow 50,000 or more than that. Okay, so the total invested is what? 150,000. So that's how they look at it. All right, because you borrowed that 50,000, so that's going into your portfolio as well. Dividend 3.5%. You earn $5,250 a year in dividends. Margin is 50,000. Okay, boom, boom, boom. Times the percentage equals $27.45 a year net income. So yeah, you're gonna take that minus the margin, right? That's what they're taking. Yeah. The net income minus the margin, which is $2,505 a year. That's about $208 a month. Number one, okay. Problem number one is not enough to live on. We know that definitely. On 3,000 a month, that's 36K a year. For 3,000 a month, you need 1 million to 1.5 million invested. And that's been my thing. That's why I say like you need a lot of money to get the big numbers. Like, cause say for example, most people will live on, I would say 5,000, maybe 8,000. You know what I'm saying? They can live off of that. So if you need you 1 to 1.5 million to get to 3,000, when would you expect to reach that? You know what I'm saying? Or will that 1 million be more worth it putting into growth stocks that could have been something else? It'll just be ideas. Like you say, you can't stick with one thing. You gotta think different ways. Plus margin on top. That's when it start becoming realistic, not at small levels. Margin risk, this is the big one. Your portfolio value drops, your borrowed money stays the same. Right. Broker can't issue a margin call. They can force sell your investment at a loss. And see, this is what people scared of right there. Like you said, brokers can't issue a margin call, but they could just sell your stuff if they want their money back. So we're beginning from the pros, and obviously do it as a pro, because yeah, that is a total strategy. Like you said, a lot of people stay away from the margin. Example, crash scenario, invest, but that's why he got his put options. Makes sense. Invest 150K, including margin, market drop 30%, portfolio equals 105,000. You still owe 50,000, so your equity is 55,000. You just lost almost half of your real money and might get margin call. And that's why it seems scary. You might get margin call. Dividends aren't guaranteed. Even safe dividends, ETFs like SHD, VYM. I don't know what VYM is. Let's see which one that was the Vanguard high deal. That should have been common sense, huh? But can cut dividends, stay flat for years, underperform growth stocks. What this strategy actually is, this is called leverage income investing. Okay. I'm going to duplicate this tab. Just look that up. Let's go back. Using debt margin to amplify income dividends. Who this strategy is for? This is only for people who already have large portfolios, 500 plus. But it seemed like O'Boy didn't have no 500 plus account. So I don't think it's for only that, especially if he started for a 17-year-old. I highly doubt that she has more than him in her account. Understand the margin mechanics deeply. And survive more crash without panic. Well, you need put options for that. The insurance, baby. Have other income sources. But seemed like all his income is definitely in dividends. If I wasn't tripping, all the income is definitely in dividends. Who should not do this? If you need stable income, no. Building wealth, you right now can't afford a 30% drop. This is not the move. Smarter version. Instead of margin, invest in VOO and SHD. So growth and income. Portfolios later when you hit 500K a million. Right. So that's why I'm confused. So it's saying build your portfolio first. Later, when you hit 500K, they're gonna shift more to income. So I'm guessing they're saying shift more to the dividends for bringing that cash flow. Then consider light margin optional. And maybe it's just ChatGPT going off of stuff I've told it and what I know. Because it's just literally like kind of saying stuff that I was thinking already. The truth. Perfect for your video. They talking about dividends feel like free money, but you borrow money to get them. They're turning a safe strategy into a risky one. So this be giving me like content ideas. So that's when it started asking about that. What else that was? That was interesting though. Go back to his video. That is interesting how you do that though. I'll listen to this one right fast. Why you live by the brokerage account?
Hi, good evening. My name's Sean. I started this YouTube channel at the request of some friends and family. Currently, I live out of my E-Trade brokerage accounts. I don't have a traditional bank account, such as Capital One, Bank of America, Wells Fargo, or others. All of my W-2 income gets deposited into my E-Trade account. And with that W-2 income, I invest in assets, such as stocks, dividend-producing ETFs or stocks, and options strategies that allow me to cash flow and or to buy assets at discounted rates or sell, or I guess I should say rent out assets. And as I continue to make more videos, I'll explain each one of those to you step by step in hopes of just helping folks live financially free. My background, I've been investing for a long, long time. I am not a financial advisor. So this is just my journey and my advice and my real life situation. But I believe that we were trained at a very young age in our world, starting in school, to be employees and to pay taxes. And I think that that's not the right way to live. I think the right way to live is to
like
buy
he
assets.
Just said, you know, be trained to be employed and pay taxes, but the taxes stood out to me because I want to know what his taxes looking like, because they say dividends you're going to get taxed on it, whether it's reinvested or whatnot. You're going to pay taxes versus, you know, wait until you sell and then you get taxed on a regular S&P 500 ETF or something.
Live off those assets and really to never sell those assets unless it's specific situations to where you know a specific asset's going to go up in value and you know a specific asset's going to come down in value. One of those specifics would be like a rights offering for a stock, and we'll talk about that more as we continue to make more videos. But I am a husband. I have 4 children. We're a family of 6. As everybody can imagine, costs are expensive, so I'm always looking for ways to grow my net worth and to just provide a legacy for my family. And I'm hoping that the advice I can share will help you as well, because we're all in the same boat. I would like to retire in the next 5 to 10 years, and I'll tell you how I'm working on doing that. So just to summarize, and then we'll start looking at the portfolio and some other things here. I invest 100% of my paycheck in high yield dividend stocks. That's right. Yes, all of it. I use DRIP, and what DRIP is basically certain dividends will pay you, and then they'll reinvest within that stock. And so some of the stock I own, I reinvest those dividends, such as SPYG here. That's a S&P 500 growth ETF. I reinvest that dividend. This is McDonald's.
So
they have a pretty healthy dividend. I also DRIP that.
ETF. So if the growth ETF, I guess he's just going off of the dividends that they're paying, right? It's supposed to go harder with this strategy January 1st, but I've been slow rolling it. But look, guess what, bro? You say slow rolling it, it's something is better than none. I tell people that even if they start to invest in, I tell people if they could save $1, $2, you know, because you don't really have to have a certain amount. A lot of people believe you need to have thousands of dollars to start investing, but that's false. You know, it's a lot of myths. I'd rather you even open an account, don't put nothing in it yet. At least you know you got your account. Just don't forget about it and automate something to it. So this way up in price. State Street SPDR portfolio growth. And he got it about like $68, I believe. What's the dividend yield? See, that's what I'm saying. Like something like this, they don't got a big dividend yield. Oh, because I was to get far. You say you wasn't getting far with it without using margin. So you started the margin strategy. How has it been going for you? Oh, you ain't messed with the margin strategy just yet. You see, this seemed like you say more of a growth stock, not really a high yield dividend. Or you haven't used any margin. So you saying you can't get, like, you not getting far with it? Right. And that's the same thing I think I set up with Robinhood, and I might have it with. No, I don't think I got it on my regular Charles Schwab account. Cause I never planned on using margin.
That CLM and CRF, these are what we call closed-end funds, and they actually
Basically
drift at the
doing that
NAV.
strategy without borrowing from the account. Okay. So, for example, right? He depositing everything into his account, but he's living off of it. So how is the money coming out? I understand he said he was borrowing, but off of borrowing against the equity. So you ever did that? Like borrowed against your equity to pay a bill yet? So far you just been putting into the high yield dividends and letting it snowball. Or did you try paying bills with any of it? Because like you said, he got dividends reinvested. If you got dividends reinvested, that means it's going back into the dividends. I'm gonna say back into the stock. So it's not giving you a check just yet. And that's why I'm gonna eventually figure it out. Just asking you because I know you've been already on it.
That means
Saying where you at with
value.
it.
So we'll talk about that more again, but it provides real value to the investor. If you utilize E-Trade, I'll just go over some very basic things here in the first video. You can see the net account value. This is basically the equity I have in the brokerage. You can see my total unrealized gain right here. This is how much I've made, and it says unrealized because I haven't sold my assets, and neither do I ever plan on selling my assets. I will borrow against my assets to pay bills and to live life.
So he'll
and to
borrow
essentially
against
live out
it.
my brokerage account.
You
can
so
see
when he
that
say
Friday,
he'll borrow against it, so he borrowing it through E-Trade at that 4.49%, 5.49%. So I want to know if they, and he got an E-Trade card, a debit card, so he must be sending it to his card or something like that.
Today is Saturday, May 3rd. So yesterday we had a pretty healthy day in the market. You can see I was almost up there about $3,000 or 1.38%. If you take into account my margin, I actually beat the S&P 500 and the NASDAQ, which I'll show you in a minute. You can see my purchasing power here, and we'll get into those specifics a little bit more down the road.
Like you got a lot of purchasing power, huh?
If you look at my performance, just to see how I've done against
major
indexes.
Well, say for example, you had because he got a lot of this invested already, but you got a big account. Would you leave this much in purchasing power? I know some people definitely do. Depends on how they deploy their money. The debit card, just like a bank card, except you use available margin. Okay. Okay, so with his card, when he got available margin, I guess he could just swipe his card and buy things with that. And eventually, to pay it back, of course, it's getting reinvested more. So, I don't know. I know it's definitely got to be a process how you pay that margin back, or do they automatically got something set up where they just pull it out? Gotta leave more than 50%. Yeah, so you don't get a margin call. Okay, yeah, I see what you're saying. To pay off all borrowed funds at once. Yeah, I see what you're saying. So that's probably why he leave his purchasing power there in case he get a margin call. It could be easily paid back. Okay. Oh, that makes more sense. You see, I appreciate that. I didn't know that. I never played margin, so margin automatically get paid back monthly. So you on the monthly plan on the borrowed amount. Okay. Well, yeah, that shouldn't be no problem then. But like you said, just in case you get a margin call, it's good to just keep that purchasing power in there. Makes sense.
If you look at my 3-year track record, you can see I'm at 50% gain here. The S&P is at 33%, the NASDAQ's at 40, the Dow is at 22, and the
So you doing your strategy through the Schwab account as well, or you tried E-Trade?
% there. If you look at the year, it's been a pretty rough start to the year. You can see my line graph rather here is the purple, and you can see where we had that healthy correction of about 20 to 25%. And we were all feeling it. And the key in those situations is to not panic, but continue to buy companies that you believe in and to stay true to your strategy.
S&P.
If you look at my 1 year, again, I'm up almost 29% versus 10.9% in the S&P and 11.27% there in the NASDAQ. Year to date, same story. You can see I'm actually positive where some of the major indexes are negative. So just wanted to show you that the strategy works. I am living out of margin. That can scare people. The way I equate it to is like a home equity line of credit. And people do that all the time. You know, if your house worth $500,000 and you owe $250,000 on it, the bank will allow you to pull a certain amount of money out on that at a discounted rate because it's secured with your asset. Brokerages are the same way. I've been investing a long time, and I'll show you my account balance just to
So
give
you're
you an idea.
pretty used to it.
So it works the same way. Essentially, the house,
Right.
you can see my net account value, and I'm paying bills. I have an E-Trade card that they send me. I pay bills out of this account. You can see this is my equity. This is just
Okay.
like your house equity. This is the equity I have in my brokerage. You can see I'm shorting some stocks, which we'll talk about. You can see the amount I could immediately withdraw right now,
Okay.
based off of what we call margin maintenance. That's essentially what the brokerage says you have to keep available as a
Okay,
cushion, so you
so
don't
here's a max available for withdrawal. That's what you got to keep for the cushion.
get into any
Yep,
risk
that's
of
the
what we call
margin
margin
call.
call. Some stocks, which we'll talk about, you can see the amount I could immediately withdraw right now, based off of what we call margin maintenance. That's essentially what the brokerage says you have to keep available as a cushion, so you don't get into any risk of what we would call a margin call. And again, I'm trying to just be very basic in this opening video. Day trading, I make some trades during the day, and I have a lot of leverage there if I need it, but I typically don't day trade a whole
Okay,
lot.
so he
But I
do
will
do
share
a little day
strategies.
trading, but his main strategy is any profits seem like they're going into dividends.
In the future, I always maintain at least 50%
Now we're going to 50%.
margin equity within my account. You can see the column on the right is real-time values as of this moment, and then it will show you the previous close, which of course was Friday, so not a lot has changed, but you can see my margin equity went down a little bit because I'm paying bills out of my brokerage with my debit card. And so and you can see every 2 weeks I have my
Okay,
paycheck
so
coming in
yeah,
here, so the paycheck flows in.
paycheck coming in, and this basically withdrawal. Let's go back to see what he.
And so and you can see every 2 weeks I have my paycheck coming in here, so the paycheck flows in. I buy assets, which are in my portfolio. You're going to see the whole view here.
So he buy the
I'll go
stuff
back to
when
my
he come
accounts.
in.
I won't share my whole portfolio right now, but you
his
can
main object is eventually the dividends will outpace his margins, right? And monthly bills, and he can stop working. So that's the whole purpose of it, because he technically never withdraws money from the account, right? That's interesting. Like you said, eventually by keep reinvesting it, and no lie, that's why it's definitely a smart option. Like you say, he's living off of their money pretty much that he's borrowing, while his money is still invested. And this, like you said, this is the buy, borrow, die strategy. It's pretty much. You deposit 100% exactly. So you're right. This is pretty much the buy, borrow, die. He got the assets, but he just borrow against them. So really, you don't pay no taxes as long as you're constantly paying on that, because that is not considered income. Definitely true. Appreciate that. He doing it. It seemed like he's been doing it for a while, so he's pretty comfortable with it.
See all the different stocks I have. As I'm buying dividend assets, you can click on this estimated income tab within E-Trade, and it'll show you this ebbs and flows, but it'll tell you how much dividends am I projected to get within the year. This is a little low. Typically, I'm around 45,000 to 50,000. The reason it's a little bit low is because Cornerstone, which you'll see down below, and I'll be talking a lot about, is doing a rights offering. So when a rights offering happens, the stock can become quite volatile because they're bringing more shares to market. But anyway, this will bounce back up once I fully participate or buy back during that rights offering. But you can see just the different dividend stocks and what they're paying. You can see about what I would get in the next month. So again, this will pay my mortgage and some. And every time my paycheck comes in, essentially I'm buying more assets. I'm utilizing margin to pay my bills, and eventually this will snowball and end up paying for itself and expediting my retirement.
Right, like you said, eventually he wants this to outweigh the margin, so the margin wouldn't be a problem at all. So he'll be able to just live straight off it because the dividends eventually outpacing it. Right? Let me know. That sound about right, huh? And it's definitely a small strategy to somebody to implement early. Now I see why some people could implement it early. So well, right, you pretty much can retire if the money coming in is outpacing your expenses. You don't really have to work to make the money because it's already on autopilot.
I am a Christian man. All this is up to the good Lord. It's not in my hands. I've been blessed with some good financial acumen, but again, I have my plans. He has his. But I'm prayerfully hoping that I can retire before too long and get into ministry.
Nice. You're trying to get into the ministry.
Financially free. Well, I guess that will probably do it for this video. Like I said, I'll make more videos as we go and just share how I would like to live a FIRE lifestyle. That stands for financially independent, retire early. If you hear that, you can reach out to me. Please like and subscribe if you're interested. We'll be talking about how I track.
I think I can subscribe from this channel. That way I don't lose it, and I can always go back. But that's what I was basically studying, though. Like, could people really live off dividends? And this gave me a whole nother point of view. that was crazy versus the stuff I was reading. It's like, okay, how much company boards, directors will determine the dividend. That's basically what I was studying, like dividend stocks, the facts and stuff like that. Determine the dividend payment. This can vary from one industry to the next and among companies in different growth phases. So he definitely do his homework on them on dividend stocks too. Cause I see he had a lot of them. Some of them was like growth, but I guess as long as they still pay the dividend and they growing, makes sense. Strategy for investing in dividend stocks. If you're going to successfully invest in dividend stocks, you need to focus on the quality of the underlying business, the sustainability of its dividends, and diversifying your capital across multiple companies, rather than solely chasing high yields. And see, in the beginning, I thought that's mainly what people was looking at, high yields. But it also said, I think up top, high yields is a sign of like a red flag, like company probably not doing too well. They're struggling. And diversifying your capital across multiple companies that solely chasing high yields. Sometimes the high yield can signal a sell-off, right, of the underlying stock and reflect a company in trouble. See, they just repeated that. I just was talking about that. Dividends are generally taxable income, and that's the thing too. So with his method that he's doing, that's what I was saying. Like, cause dividends is taxable regardless, like if you're doing drip or not. So I want to know if he's doing margin to pay those taxes, cause you got to pay taxes every year. So he don't got to pay capital gains taxes on. Well, he gonna have to pay capital gains tax, but he don't got to pay the taxes on the margin because he's borrowing against his own assets. But you got to pay taxes on the assets, if that makes sense. I believe that's how it work. Qualified dividends are often taxed lower rates than ordinary income. Okay, so see, I didn't know that either. Dividends are taxed at lower rates, but you still gonna get taxed. Taxed at lower rates than ordinary income. So consider this when planning your strategy. If you need current income, retirement, you may prioritize stable, higher yield stocks or financial to support robust payout. Should only be taxed on dividends, right? Yeah, yeah. And so like the growth stocks that he had, right? I don't think it's getting taxed, but it will be taxed just on the dividend, not the realized gain. Only that dividend income. That's what's gonna be taxed. So that's true right there. And like you saying, that's way less taxes than paying it on like the realized gains and all that. That's a big difference. You may prioritize still higher financial support and robust payout. If you are growth oriented with a long time horizon, focus on companies with lower initial yields but strong dividend growth rates. So that's more important, like over the long term, seem like a growing company versus just high yields. You see dividend stock versus dividend funds. Okay, so just getting into something else because I never looked into dividend funds. Dividend stocks and dividend funds are both popular ways to generate income and potentially grow your investment. And dividend funds, such as mutual funds, so a dividend fund, so mutual funds considered as a dividend fund. See, didn't really look at the ETF. So okay, so it's the same thing I already knew about, but I didn't know it was considered the dividend funds. But okay, let's go. Dividend funds such as mutual funds and exchange traded funds (ETFs) invest in portfolios of dividend paying stocks like SCHD. I'm guessing, and definitely ETF. Dividend funds can offer diversification and professional oversight by investment managers who carefully select the underlying stocks, with a dividend fund paying attention to the expense ratio to determine how much of your investment goes toward fees. Yeah, a lot of people don't pay attention to that, but I heard the fees definitely on bone dry. How you done? Both type of investment can offer advantages returns for a long-term investor with a well-diversified portfolio and a durable time horizon. Best sectors for dividend investing. Dividend investors often prefer companies across a range of sectors with stable cash flow and predictable earnings. The best market sectors can offer different advantages from high yields to steady dividend growth. However, the right mix really does depend on your investment goal. The utilities, energy, healthcare, consumer goods, and financial sectors contain some of the top dividend paying companies to consider. I seen that they offered that way at the top. Lowe's. I think they talked about Lowe's way at the top. It seemed like number one on the list of dividend Paying stocks. Very exciting stock, and that's true. Unless you like dividend growth, the company has raised its dividend almost every year. Dang, since going public in 1961, and has raised the payout by more than 300% over the trailing decade. Hmm. And that's definitely got that history. 1961. That's crazy. They got a dividend yield. See, it's not no crazy 5-6%. That's what gets scary. Before you buy stock in Lowe's company, consider this the Motley Fool advisor. Oh, this what they always get you at right here. The Motley Fool stock advisor analyst team just bless you. Just bless you. Just identified that they believe are the best 10 stocks. God bless you. For investors to buy now. And Lowe's companies wasn't one of them. The 10 stocks that made the cut could produce monster returns in the coming years. I don't know if you ever use Motley Fool, but they always tell you this. Consider when Netflix made this list in 2004. If you invested $1,000 at the time of the recommendation, you'll have $555,000. That's crazy, huh? Just to think about that. I guess it's like this probably not when they really IPO'd, but when they got on, when they first got a little hey, well, let me see when Netflix even IPO. I ain't gonna change that because I want to keep that up there. When did Netflix IPO? $2002. They went public in 2002 at $15 a share. And they saying that they would have told you at 2014 or 2004, right? That's what they said. Yeah, 2004. If you could catch stuff like that, like I said, just $1,000, it's crazy. That today it'll be $500,000. And the video even worse. $1,000 in the video will be $1 million and something dollars. It's crazy. But you gotta catch them early. They say best dividend favorite asked question. What is the dividend in stocks? I did it by. They're gonna. Years are often less important. The ETF definitely play dividends, I know. Yeah, it definitely matters when you buy dividend stocks. Let's see what it says. When you buy dividend stocks, it matters if you purchase them before the X dividend date. Oh yeah, because some of them got that certain day. That's quarterly. To receive the next dividend payment, you need to own the stock on or before the date. All right. Oh, this thing stuck on me. What's going on? My neck hurt. Man, my bad, y'all. How long we been on here? Oh yeah, we've been on here for an hour. And so far, I think I definitely learned a lot just from the dividend, especially the strategy. So appreciate you, True. So we probably gonna hop off, but appreciate you, True, bro. That definitely gonna help me out. I definitely subscribe to that channel to definitely learn some more about that because I've been definitely looking at different strategies. And right now, currently, the options seem like options is definitely that way to build that income fast and like triple your growth. Appreciate it, True. Appreciate it, True. And let me know your opinion on that, like options, because I'm definitely gonna go the option route, but I'm gonna use the option money to either, like you say, pay into dividend stocks or pay into long-term investing. Because I know a lot of people they trade options, but they don't do nothing with the money. They let it sit there, and I think that'll be option profits going into something else and constantly building up. 7 best model how to calculate dividends without balance sheet. Yeah, that's the thing. So I've been studying them. I definitely just study more, but I believe I'm pretty good with it. It just took me. I went through all the learning phase, I'll say. Cause when I first learned options, I invested into Apple. I did a trade. I think it was a damn, what is it called, man? A call option. I'm tripping. I'm thinking of puts. So I'm like, yeah, it's a call option. I did a call option on Apple at an all-time high at like $270 something, which was crazy because at the time I ain't know. I just knew exactly how to set it up and how to buy a call option. But like I said, that was like $200-300. I wasn't tripping because this how bad it was. I couldn't find it nowhere. For some reason, I couldn't find it nowhere. I was like, I bought the option, but I never knew I could take my money out if the stock dropped to 10% or whatever. So I just was looking at the thing, just my money was gone. Yeah. You know what's a good leap right now, True? I don't know if you paid attention to it. Microsoft. I could pull that up too. Microsoft is crazy right now. Because Microsoft went up today. They was way down here, 367. Matter of fact, I'm gonna go to 8 o'clock in the morning when the market open. It looked like it dipped down from market open from 369 down to 37 and then bounced up. I've been watching it and I love the $20 premium. Well, you talking about on with the options or Microsoft in general? Oh yeah, Microsoft. So you be on what you do like cover calls? Cause that's another thing I'm looking at too. They say people do cover calls and cover and cash secure puts, something like that. But you need to own like the 100 shares of them. And like you could get them premiums, but the option could get called away. So you gotta sell all your shares. Oh, you just do Microsoft call options, okay. When you say $20 premium, so you're talking like the ones like that's how much they cost, them $20 premiums. I thought you was collecting premiums. Well, yeah, if you're doing a call option, then yeah. Like I say, it could be a little costly, but you just gotta know when to get it. Like right here, somebody was to get, let's say over a year, your turn. It's down right now, but we all know Microsoft way up here. They all time high is like 535. Let's make sure 555. Yeah, the one that costs $20. Yeah, $2,000 for that on contract of 100. Well, yeah, like a leap option here would be crazy. You know what I'm saying? Like, because in 6 months, now mind you, it only been what 2 months that brought this stock down, where it been dropping. But within this little 2 months, most of the Mag 7, yeah. The one that's crazy, I know you say you traded a lot, was Tesla. Tesla is like, they the only ones so far that I've seen that like the chart patterns don't always go with the indicators, I would say. Sometimes that bad boy just do something crazy. You just gotta kind of do more shorter plays, I'll say, cause long term like this, where did this come from? You see that? This like what do it make sense for that? You know, that bad boy went all the way from 340 something, and you telling me it bounced that fast up to 390, and then boom, it come back down. And some people that know Tesla for doing crazy stuff like that, yeah, they probably made a whole lot of money, hurry up and sold that, boom. But most likely it might have been too short to even catch it. Let me see. Could I even zoom in on that? It probably ain't gonna. Yeah, it probably was too short to even catch. It was within a couple of minutes. Pull out the whole. That was today at what time? This not even a day. So this was that right there. What they call that, Morning Star or something? They not the first though. I almost see it on this chart though. But yeah, that's the main thing on with trading. Magnificent Seven. SoFi, but somebody told me about SoFi. Of course, they way lower premiums, but way longer times for it to move. Tesla and like you said, Microsoft stuff like that can move in one day, easily take your money off the table. But yeah, I've been in here for an hour though. True, appreciate you for hopping in. And I was gonna take this video, probably not even chop it up and just post it on YouTube and just so I can go back at it and look at it, learn from it. Or let anybody else go back and look at it, learn from it, because I was trying to go live on YouTube, but for some reason it wouldn't let me do that and Twitch. I know YouTube, I don't know how to get the vibe, which I could have just did it straight on YouTube. I don't know, but I won't make like clips of it, so that's why I wanted to divide though. But appreciate you, that true, bro. Keep up with that investment journey, bro. Keep it up, keep it up. And I'm definitely about to be on top of my stuff. And definitely, if you got anybody, you still been doing your own? Cause I know I ain't been catching nobody on Twitch. You still been doing your, what you call it, like the investment on things, investment streams. I know you're studying the market, talking about certain things here and there. Let's say Oracle about to be going back up, but Oracle is super high though. Big old gap jump. I'm tripping, huh? My bad. I'm thinking I'm showing the charts, but the whole time I wasn't showing the chart. I was just talking. Forgot I had on a regular stream. And I had on a regular stream when I was reading too. But we about to be getting off here though. Peace out, everybody. Have a good night. Good night. We're gonna catch y'all tomorrow. Definitely got some videos that's gonna be coming out. Peace.